Yeah, hello and welcome to another update video about Ethereum. The Ethereum chart continues to move in its local sideways range, so it's hardly affected by what's going on at the moment with many altcoins dropping substantially. Like Solana broke initial support, but yeah, most of these altcoins are really suffering. I mean, Ethereum dropping as well, but it's far away from critical support. So from that point of view, as I said to you, as long as we're moving in this sideways range here, it can move up and down as often as it wants. It doesn't really change anything. Surely you get some reinterpretations about the microstructure, but that is not reliable anyway. So it's simply trying to make sense of what's happening right now, and these can extend these movements. Microstructure is really extremely unreliable at the moment. Yeah, it could easily be a B wave top here, but then we would need a break below the red line to confirm, and even that would simply open the door for a wider wave 2 then, and the main support doesn't change at all at the moment. Yeah, not until we either break out finally to the upside of the range, which would involve a break above $2,927, or even below 2,270. So this is a range, and the closer we are to the lower boundary here at 2,270, the better the reward to risk ratio for long traders. Up here it's pretty miserable, I would say, unless you're using the 9th of February low as stop, but it's just not very clear because you can't trust this move. It's too weak, and there's a lot of overlap in the structure. So I mean, we might go down to test here the lower levels of the Fibonacci support zone, which would, I think, actually be good for Ethereum. As long as we can hold 2,270, the overall bullish scenario would still be intact. Why would that be good? Because, I mean, this is just a very, very shaky foundation for any further upside. Yeah, it just looks how weak the market is at the moment. Okay, the bears are not clearly winning, but the bulls aren't either. So often what is needed then is a move down, like a final shakeout that scares the weekends, and then from there a new impulsive rally could occur. But at the moment we don't see that. We've been moving in this sideways range now, you could say, since the 4th of February. And we've got the key levels here clearly visible on the chart. Again, 2,927 for an upside breakout. Well, that could send us higher in a third wave. I would say, first of all, probably into the area around the previous highs, probably around 3,400 to 3,500. And to the downside, it's the red line at 2,525. That will be the invalidation point for the orange count, and below that, 2,270. And what we have here is potentially some kind of a leading diagonal in development in the orange count, but that is not reliable. So I try to track the patterns as they evolve, but I don't have any high probability set up here on the smaller time frame right now. So we'll need to get a bit more clarity and finally a breakout or below key levels, so that we finally get get some clarity and get some progress, because what Ethereum is doing right now isn't really anything interesting from an analysis point of view. It's simply a range which just extends at the moment. So best way to trade this is probably just to use the range boundaries if you're interested in trading the range. But yeah, from a trend trader point of view, this is pretty boring at the moment. So I'll keep you updated. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on our MCO Global channel. A few days ago, I covered Ethereum here from a long-term point of view. We took a look at the Ethereum long-term patterns, cycle, what could happen in the next bear market, and so on. So this is our long-term outlook. Check it out if you're interested. And yeah, have a great day. Thank you very much. Bye-bye.